Greetings, everyone. I'd like to first thank Tanya and Traders Talk Live for the opportunity to present to you today. We're very excited to be here, so we ask that you just sit back, relax, and enjoy the show. Here we go. My name is Gary R. Albrecht, founder and CEO of GPA Trading Services. We're the mastermind and creator of the one-of-a-kind Premium Edition 3 trading software. I'm the educator as well as the instructor. A brief bio. Why should you take a moment to listen to our trading skills and our software? Well, I've been a professional trader for 20 plus years. I'm a technical analysis expert. I'm the creator of a one-of-a-kind custom bespoke software, trading software. We founded GPA Trading Services over 8 years ago. We've been educating thousands of students from around the world for many years. We've conducted numerous live events, speaking engagements, platinum program. We offer one-on-one coaching and mentorships. If you haven't had the opportunity, this is our website. We welcome you to peruse the website. Today's topic is going to be analyzing the markets from a multi-time frame perspective. A brief disclaimer, I'd like to highlight a few points. Trading is not suitable for all people. Some markets are leveraged, and therefore it is possible to lose money deposited for a position. Persons should only use funds that they can afford to lose and that fits within their overall financial plan as developed by a qualified financial planner. We include our risk rules in here. We never risk more than 2% of our entire account balance on any one given trade. For options traders, we never risk more than 5% of our entire account balance on any one given options trade. And most importantly is always adhere to strict and proper money management. Finally, all information in this presentation is for your educational purposes only and should not be taken as investment advice, nor as a specific recommendation or endorsement to buy or sell any specific investment. Trade at your own risk. Now, some key components when you're anticipating future market conditions through a multi-time frame analysis is going to be support and resistance, trend direction, utilizing the multiple time frames, and the key here again is to align those time frames prior to trading. And then finally, understanding how the lower time frames cycle within the larger time frames. And we like to refer to that as the line of progression. Now, what exactly is the line of progression? Well, first, let's talk about aligning the time frames. You'll notice in this example, we're aligning the monthly time frame. It's overbought turning over. The trend momentum is overbought turning over. And we want to align that with the weekly when it's overbought and the daily when it's overbought. And that's what we mean by aligning multiple time frames together. In this example, it happens to be the monthly, the weekly, and the daily. But this works on all time frames. So for scalpers, you would align the lower time frames. Day traders and above, 4 hour. And any investment traders, longer term traders, daily, weekly, monthly, etc. So it's just simply aligning time frames. And notice that this process that we're going to talk about, the line of progression, whenever you have in this software, we call this the hook and cross pattern, a PAI hook with the trend momentum cross, it means something. It means that this weekly, once the monthly hooks and crosses, will move from overbought all the way to oversold. And the trend momentums will move from overbought all the way to oversold. And this is a telltale sign that gold was continuing to move lower. And I still think gold has a little further to go before the major bounce comes later, as the monthly is expected to finish this down cycle. This is a current screenshot of gold. So this is current data as we see how the monthly is setting up. The weekly's been moving as expected to oversold. And then this process we call slingshotting. It's going to continue to slingshot lower so that the monthly can actually finish their cycle. Well, this is interesting because it works on all time frames. And notice the line of progression. What does the daily do? It moves from overbought to oversold. Then it starts this phenomenon called slingshotting. Slingshotting lower and lower and lower. And as price what? Stair steps lower and lower and lower and lower. And what's unique about this line of progression, it gives you the ideal time when people say, well, we know we're in a downtrend and the rule is to sell the rallies in a downtrend. Well, what's the definition of a rally? Just because it's starting to bounce, does that mean it's going to rally? Is it going to go higher? Is it going to go lower? That's where these slingshots come in. And when they start to turn over and engage back down, and we call that engaging, that's when you sell the rally. Next one, sell the rally. And it's expected to continue that behavior because the weekly was moving down and the monthly is moving down. So it's simple. All you're doing is aligning the two different indicators, the MPA trend momentum and the price action indicator. You want to both have either oversold or overbought in together on the time frames, and that's it, just simply aligning. Next up, we talk about, and again, just referencing again the slingshot phenomenon. You'll see that over and over as we talk about when monthlies move, weeklies finish cycles, when weeklies hooking across, daily finishes cycles, and the process of slingshotting is a repetition that constantly is in motion. In other words, basically, price will never move lower without slingshotting, and price will never move higher without slingshotting. That's what the time frames do, and it's a beautiful thing. So here's another example of following what we mean by following the line of progression. Again, here's where we were setting up for oil as it was moving and expected to move down. We also offer these triggers. This is one of the others for visual aid to say, okay, now it's time to sell. There's your trigger. And you want to look for the hook pattern. And then a trend continuation sign is when you get the hook and the cross. You'll hear me reference the hook and cross pattern frequently, because once we hooked and crossed right there, it meant what? In case of the weekly hooking and crossing, it meant the daily was going to move from overbought to oversold and then slingshot lower and lower and lower and lower and lower. That's how the weekly makes the cycle. That's simple. So that's all you need to do is you line them up, and when you see a hook and cross pattern, it means the next lower time frame will take days for that daily cycle to cycle down, and then it's expected to keep slingshotting because the weekly was still down during that period of time. And notice what it does for us. It constantly continues with moving from overbought to oversold, then slingshotting over and over and over. And I'll go back to that one more time to show you. That's what it means by sell the rally in a downtrend. When the slingshot forms and then engages, you sell. When it goes up and hooks back down, you sell. It goes up, you hook back down, you sell. Goes up, hooks back down, you sell. And you just rinse and repeat while the weekly takes weeks and weeks and weeks and weeks and weeks and weeks and weeks to cycle. And this is how we simply trade each and every day in our live classes. And again, this works on all time frames, so those of you that are scalpers, hang in there. I have some surprises for you as well. So here's another example, just looking at a currency pair. We trade all markets. So here's an example with the euro starting to bottom on a monthly. The PAI started to hook, and the trend momentum is just about finished its cycle and getting ready to turn. But notice what we have on the weekly. The weekly hooked, crossed, which meant the daily was going to do what? Go from oversold to overbought. And when the daily hooked and crossed, it meant the 4-hour was going to go from oversold to overbought, plus the line of progression, slingshot higher, higher, and higher. This behavior is on cue. Every time the daily is continuing to push higher, the 4 hours is expected to turn over to slingshot. Turn over to slingshot, and you're able to do that. In this case, we would be buying the dip in the uptrend when the slingshot formed and then turned to engage. That's simple. So I'll just illustrate that through the rest. Got a couple more of these little lines just showing, yep, there's the weekly with the hook and cross pattern, showing that we have a hook, we have the cross. What does the hook mean? It means the red, the blue, and the green are turning up, hooking. And the cross, in the case where you're oversold, it's where the green line crosses above the red and it moves up. And it's just like other importance of, say, crossing EMAs or moving averages. The steeper the slope and the more angle of the separation of the cross, the stronger the trend. So remember that. The steeper the slope and the more angle and separation. What do we mean by angle and separation? When green crosses above the red, you can see it separates and you can see the gray background between the green and the red line. So the steeper the slope and the more angle and separation, the stronger the trend. That's simple. Well, that's the same for T-lines and any EMA crossings and anything out there. Moving averages. 50 above the 100, etc. The steeper the slope, the more angle and separation, the stronger the trend. So this holds true to that as well. And as we finish this, again, the daily setup, we had a monthly, a weekly, a daily. So that was why pound was expected to bounce for hundreds and hundreds and hundreds and hundreds of pips. And we did that very nicely, knowing that once the 4-hour reached overbought, it was going to slingshot higher anyway, because the daily was still going up. And then what's not shown in this picture is the daily turned over to slingshot higher because the weekly kept going. And eventually we got the monthly to turn and hook, and we had a nice further rally that continued on this trade. Okay? So let's go to the charts and show you what we mean in person. Live in the markets. We'll start off with sugar. This is a trade we're currently in. Sugar was lining up very nicely. One of our students, actually one of our new students, called my attention to this a couple of weeks ago when we were in class and said, hey, check out sugar. And I looked at sugar and I said, well, check it out. We have the weekly deeply oversold. This is before it turned and hooked, obviously. We had a monthly. See, both the PAI and the trend momentum are deeply oversold. We color coordinate everything for you. When you're deeply oversold, you think about buying, so you see the green line. And when you're deeply overbought, you should be thinking about selling, so then you have the red line. And the same with the trend momentum. When it's overbought, you think about selling. When it's oversold, you think about buying. And notice what we have, the monthly starting to hook. Any futures traders out there? Any futures trader. Sugar is definitely going to keep stair-stepping higher. Why? We already have a monthly starting to hook. We don't have the cross yet, but the monthly starting to hook. But what do we have? We already currently have a weekly that has a beautiful hook and a cross. It has steep slope. It has angle and separation. So what do we know when we entered this trade? That we knew, based on the weekly starting to hook a few weeks back, the daily would definitely finish the cycle all the way to overbought. Well, based on the steep slope and the angle and separation of that weekly, sugar is expected not only to continue climbing, but you see how the daily's finishing the cycle. So guess what? Based on that hook and cross pattern on the weekly, we're more than likely going to see a very high probability this daily is going to turn over to what? Slingshot higher and higher and higher. And the mechanics of this is set. It's not your average run-of-the-mill indicator. It's a proprietary indicator that's been produced for years and years and years and improved. And this is all set by timing of the cycling time frame. So in easy terms, everything that the software does is based on the cycles within each time frame. And the software is so unique and so smart, it's aware of where all time frames and indicators are located. So in other words, why is a hook pattern so important for an entry? Because on a daily, for example, sugar would have never hooked up unless the 4-hour was already hooking and crossing. And the 1-hour was hooking and crossing. So it's specifically programmed so that it would not turn up until the lower time frames, in this example being on a daily, would be the 4-hour, the 1-hour, etc. And they were oversold and already turned and hooked and crossed. So we knew that when this started to hook, the 4-hour was going to move up and price was going to move up. But we knew later that days and days and days ago, we knew that sugar was going to continue higher because why? The weekly hooked and crossed, right? Remember that. The weekly hooked and crossed, and it meant weeks ago we were going to see sugar go higher for days and days and days and days and days, right? Meaning this daily would cycle towards overbought, and the trend momentums would cycle towards overbought. And notice, it's markets aren't ticking right now, so once it ticks and makes a move, you'll see it populate and show that this trade management system is monitoring the trade and it's managing the trade for you automatically. But notice, just look at the simple lots. Here's a couple of trades we placed in the last couple of weeks in our live class, and the FTSE, we're still short on the FTSE, but we took profit 1, and it's last profit still running, I should say. It's up 3,800, and sugar is up 35,700, right? Just trading lots and allowing the time frames to cycle. But notice under the history, here's where my first take profit on sugar. So the sugar trade that we're in, you see it says trade in progress. If this would tick a point or anything, it would populate for you, and I'll show you in a minute what that looks like. But you can see we're up, and the first take profit was 11,800, and then our first take profit on the FTSE was 2,200, followed by take profit 2 was another 3,200, and then we're currently in the last remaining lot running. That's up in another 3,800. So why do we know that the FTSE is expected to continue lower, and why are we expecting sugar to continue higher? Well, the FTSE is expected to continue lower because we have the weekly slope angle separation moving lower. I'll use the big red cursor for emphasis. We have the PAI and the trend momentum down, finishing the cycle. It's already exhibited behavior of engaging up, failing, and discontinuing. This is a sign the weekly wants to finish the cycle. Well, what's another sign this weekly is more than likely, highest of probabilities, going to finish this down cycle for several more weeks, at least for a few more weeks. Well, look at the monthly. The monthly already has the hook and the beginning of a cross. Everybody see that? We have the hook, we have the beginning of a cross. So that tells us, if you're listening, that a monthly hook and a monthly cross, the FTSE is expected to continue lower for at least another week or so, so the weekly can extend week after week after week, right? Just finish the cycle. So that's why we took profit 1 and 2. And now we've already banked over $5,000 plus on the trade. We're up another 3,800. But if we reverse, our stop loss is in profit. See how it says you're up 21.30 profit, and we got 21.25, 35.30. So even if it reverses, you're still going to make more profit. So this is what we like to call a winning trade that is no longer at risk. And it can never become a losing trade, because as it reverses, it'll automatically take you out whether you're at your computer or not, as long as it's running. And this is the trade management system. Everything about our trade management system is color coordinated as well. When you're short, the text is red. When you're long, the text is green. When you, obviously when you place a short trade, your stop loss in red is here, and then your take profits will pop in down below, and you can adjust for how far or how close. Plus it offers on-screen programming. Well, all you got to do is click and drag if you think it's going to go lower, or click and move it up and lock it in place if you think it's going to maybe reverse before it gets there. I think we have a very high probability with the weekly finishing the down cycle that we're very likely going to come and retest the low. So I'm going to leave it about where it is for now, and we can reassess later. But you see how easy it is? You align the time frames and you enter the trade. We have the triggers if you want them for a visual, extra visual aid. That's there for your viewing pleasure as well. But notice it's the same thing over and over. So what's another good trade that's setting up? Same thing with the Russell, and I'm not going to go through all of these, but the Russell's in the same boat. This daily is trying to engage up, but it's going to fail. Watch this cursor. It's going to turn and hook down and finish this down cycle. Anyone want to venture out to guess why that the Russell is expected to finish this daily down cycle? Simple. All you got to do is go to the weekly and say, well, we have a hook and we're so close to a cross. So the Russell is going to be important as we close the business Friday and reopen next week. If this hook extends lower and we get the official cross, then what will that tell us starting next week? That my weekly hook and cross pattern's intact, and that this daily will continue day after day after day after day, multiple days still to come to the downside. And that's how we get in these trades and make profitable trades on a regular basis. simply aligning the time frame. Well, if that wasn't enough for you, just aligning the time frames by visually looking at it, we have scanners that run 24/7, constantly when the markets are open, to tell you when these time frames are overbought or oversold. We have a couple of different scanners we can review in just a moment. What else do we have for you? Well, we got a couple of other great trades in the Forex market that are setting up. The one is the odd CAD, Aussie, Canadian dollar, and you want to be long the odd CAD. Why? Because my 1 hour cycling up, my 4 hour has a hook and cross pattern, which early on, what does a hook and cross pattern mean? Hours ago, this is a 4 hour, 4 hour, 4 hour. Many hours ago, we had the hook and the cross pattern with steep slope, angle separation. So what does a 4 hour hook and cross pattern equal? It equals the 1 hour in this case, because that's a 4 hour hook and a cross, that the 1 hour will finish the up cycle. It will finish the up cycle. And even if it tries to slingshot lower, it's expected to fail and continue higher. Well, we have so many cool attributes to the software that we have a rule that whenever a slingshot engages and disengages, and you end up with a price pattern reversal, a low, a high, a higher low, and as it turns and hooks out, we know it's highly probable going to go to the previous high and make a new high. I'll show you that over and over, not only on 1 hour, but on a monthly, on a weekly, where when a monthly engages and disengages, it takes months and months and months for that cycle for the weekly to move. So you're talking thousands of pips in the Forex market. You're talking hundreds of dollars depending on the stock or futures, etc. It could be huge movement because it's a whole weekly cycle up. Well, we don't have that yet, but what do we have for the odd cat? We got a daily deeply oversold. Those of you who trade Forex, do yourself a favor. This baby is going higher. It's not going to just go straight up every day of every second. You're going to keep gaining in pips, but it's going to stair step. Why does it stair step? Price always stair steps. In a downtrend, in an uptrend, it doesn't matter. It's because the time frames cycle. All time frames cycle, and they will always continue to cycle. So that leads us to the next benefit of this software. It will never, under any circumstance, become obsolete. There's not a market condition that can be developed, created, that this would become obsolete because the time frames are always going to cycle. It's always the case. So why is this a great trade? Because not only is my 4 hour with a hook and a cross knowing the 1 hour is going to finish the cycle, but we're starting to see the daily. And as we move through today's close and tomorrow's open at 5 p.m. Eastern in the Forex market, we get a new daily candle. And we're going to end up with what? Looks like we're going to extend for a up move, that this will extend higher with the new daily candle. And we're likely to see that we're likely to get the hook and cross pattern. Well, what if it takes a second day before we officially get the hook and the cross? Well, even if it's on Thursday by the time we officially get the hook and the cross, it means we're going to get 4, 8, 12, 16, 20, 24 hours. We're going to get at least a couple of days or so of the 4 hour cycling overbought. Right now, we have the 4 hour hook and a cross clearly on the 4 hour, which means this 1 hour is going to finish the cycle. Engage, disengage, engage, disengage. It's still will finish the cycle. So why else is this important? Because look at the weekly. It looks like similar to what the sugar trade started with before it started bouncing. The weekly's deeply oversold. Yes, it's still down, but it's deeply oversold and it's required to depressurize. Even if it depressurizes the slingshot lower later, it's still going to bounce. Well, let me add one more beautiful caveat. Whenever you get a hook and a cross pattern, it equals a Fibonacci sweet spot retracement. The probability that this is going to work its way back toward the sweet spot once we get the hook and the cross pattern becomes very high probability, and notice where it's sitting. It's up here at 96.40. So that's over 320 plus pips still to come to the upside once this hooks and crosses. Well, why do I think this is going to definitely hook and cross in the coming days and weeks? Because check out the monthly. This is a perfect setup. It is still down, it's oversold, but it too is going to need to depressurize, as we call it, where this will turn up to depressurize. And even if price wants to make lower highs and lower lows and continue, right? Even if it continues, it's still going to what? Need to depressurize and move up so then you can sell the rally. Well, look at the technical picture. We take everything into consideration based on the software. Notice over the last several years, we've been range bound between the upper bands and the lower bands. And the last time we bounced, we went all just short of the top and came back down, but reached and then came down. Notice, so the probability that this monthly wants to turn and go back up is high because it's oversold, and the least it can do is turn up to slingshot. So we're expecting it's going to rally to the sweet spot eventually, and then could even go all the way up to the upper quadrant that it's been in. Well, look at that number. Now you're looking at over 900 pips. Not just the 300 plus to get to the sweet spot, but you're talking 900 potential pips in the coming weeks and months. So again, this is easy. Got a monthly oversold, got a weekly oversold, got a daily oversold. We had a 4-hour oversold the other day when we placed that trade, and this is why we what? Are in this long. And no, it's not going to go straight up. It's going to stair step higher, but it's a guarantee that as long as you get the hooks and crosses, you always see the lower time frame cycle. And that's why the 4-hour has the hook and cross, and we can boldly say this 1 hour, even as it started tanking right here, I told everyone, watch it fail. Watch it end up from a higher low and then go back to the previous high and make a new high. Remember that rule? When it engages and then disengages, it's going to go back to the previous high and make a new high. There it is on the hour. Let me show you on a different pair that we did it on the monthly, and it rallied to thousands of pips. Here's the pound odd. We're up 1,957 pips for the same reason. Go back. We had a monthly that was oversold, moving higher, and it just recently did what? Engaged, disengaged. Everybody good? So we'll go back in history. When it engaged and disengaged there, we went up to the high, engaged down. Then when it disengaged, what did it do when it released? It went back to the high and made a new high. Then it engaged again and released, and it went back to the high and made a new high. It did it a third time, a little small one there. It engaged down and went back to the high and made a new high. So guess where we are now? We're disengaging here, which means this is going to rally back up to the previous high right there and make a new high. Very high probability. So where's that high? On a monthly, it doesn't look like much, but that high is sitting at 85.07. You're talking in the neighborhood of 300, almost 400 pips to get back to 85.07 and get into higher. So this is another trade that will continue higher, and as it continues to stair step in an upwards direction. But this is the cool thing. You get a hook and a cross pattern. Remember, early on, the weekly's going to do what? The weekly's going to cycle from oversold to overbought. And each time it did the hook and cross pattern, cycles to oversold, overbought. And what's the scenario? We have a hook and cross pattern up. So tell me, ladies and gentlemen, what's the likelihood this pound odd finishes this weekly cycle while we have weeks and weeks and weeks and weeks and weeks of upside pressure? Weeks and weeks and weeks of upside pressure. And again, it doesn't mean that every week has to be a green candle. No, in the strongest of uptrends, or in this case, the strongest of downtrends, you can have up weeks, and the strongest of uptrends, you can have down weeks. But it means this weekly will continue for several more weeks to finish that up cycle. And that's why this is also a good trade to keep buying the dips in the uptrend. We've been buying it for thousands of pips, buying the dips in the uptrend via what? Slingshot, 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 on cue. Okay? Now, coffee. Coffee's another one for you futures traders. Coffee is in the process what we believe is starting to bottom and reverse. It may end up pulling back a little bit more too. The weekly's starting to turn over a little bit, but the bias is this is going to fail and turn and hook back this way. And once it engages and disengages, what do we know about coffee? Well, it's going to go back to that previous weekly high and make a new high. Well, it hasn't officially turned yet. No, it hasn't. But why do we think coffee's due to go much higher? Check out the monthly. It's deeply oversold and it's starting to hook. And in the coming days and next several weeks, we're likely to see this monthly hook and cross. So what would that mean for coffee? A monthly hook, a monthly cross. It means we're going to get what? Weeks and weeks and weeks and weeks and weeks and weeks and weeks of upside pressure. And this is going to cross over and go weeks and weeks and weeks and weeks and weeks of upside pressure. So I'm not saying I guarantee the monthly is definitely going to hook and cross immediately. Maybe this weekly does come back down, but this is one that is setting up, and we start the process by buying the lower time frame hook. And then if the higher time frame doesn't join forces, then you take your profits and then you get out and then wait for it to pull back down and try again. But we do this every day of every class, and it's constant, and the time frames are always aligning. Well, again, remember, this weekly would have never hooked a few weeks back unless the daily was ready to start moving from what? Oversold towards overbought. And the trend momentum didn't officially cross with angle and separation. Just the hook alone allowed the daily to cycle from oversold towards overbought, oversold towards overbought. So we scalped into this and made some profits. And now we're waiting for the next reversal to start scalping in again. So the bias is coffee's going to keep stair-stepping up. All right, let's continue. So that's just a little taste. So what are we offering? Well, before we get you excited about what we're offering, we wanted to review more. That was some live results. Here's some previous results that we have, and we constantly continue to get big results. Here's an example of gold. We traded gold. Notice very large positions using some standard lots and trading anything we want based on the hook and cross pattern. But in this one example, this was not a small trade. Gold went up over $126. $126 move higher. Why? Because we had the hook and cross pattern. And this is just an example, $126 move on gold. And here's gold to the downside. Notice we got the trigger to go short. We got the hook and the cross pattern. Price cycled because not only was the daily expected to cycle down, but once it went down, it was expected to slingshot lower and lower and lower because the weekly was down at the time. And here it is, $150 move down on gold. Students that use TradeStation uses the signal from our software to trade in TradeStation to place its corresponding trades. You can see these are several Forex trades that set up where the higher time frames were aligned. He was able to get in these trades and made over 8,600 pips. Well, he sent an email and said, well, Gary, I don't think we're finished yet because the slice of heaven says we still got more to go. So his account went up to 18,000, from 8,600 to 18,300 because of the direction of the trend and the cycles that were unfolding. And notice here's that same picture in the TradeStation, multiple trades still running, tallying all these up equals over 18,311 pips. This is commonplace for not only our classes, but for our members. Here's another one of gold, just another example. Here's another time gold went up $110 move. Very significant moves, just simply by following the cycles. And we'll continue. I have some more. Here's one, the pound odd, that started out at a whopping 779 pips. And we knew, because of the higher time frames, which you're not seeing in this picture, we knew the daily was expected to go to oversold and then slingshot lower and lower and lower because the monthly was turning over, the weekly was turning over, and the daily was turning over. So we were able to get in and start to make profits, 778 pips. Well, guess what? We continued to let it run. And that went from 778 to 1,240. 1,274. We still weren't finished. The time frames were still aligned. It continued to grow into 2,270 pips. Well, the reason we didn't close it because the monthly and the weekly still had more in the fuel tank. Ever ask your question? How do I know when I'm in a trade? When do I get out? When it starts to go against me, do I get out? Do I let it continue to run? At what point do you decide to get out? That's where the gauges allow you to know as it starts running in overbought territory, you need to start taking profits off. but we kept letting this one run because the time frame still said we had more to go, and it went on to 3,627 pips. Here's another one, pound CAD, 3,073 pips. Continue, pound yen, 3,215 pips. Here's what we call a breakout trade, the software. Sets up automatically, whether you trade Forex or not. This was during the London session, and I could set my program here to say, okay, after the first hour of trading, and you set it on an hourly time frame for the first hour, it will automatically plug in your high and a low. And then you could tell it to either sell the rally in the downtrend or buy it when it breaks to the upside. Well, depending on the direction of the cycles, I'll tell it either, hey, it's bottoms and it looks like it wants to bounce, and I'll say buy it if it breaks the high. Or if it's in a downtrend like this example was, we said don't buy anything to the upside, only sell it when it breaks the low. And this was just a simple scalping trade that ran 272 pips. Just simply on a breakout. And that's what we call the MPA breakout. Well, 272 breakout. How about that? Well, okay, I see you got results. We see live trades running. You just gave us 2 to 3 juicy trades. Coffee, sugar, those are going to be going higher in the several months and weeks to come. We have the odd CAD, the Euro New Zealand. It's reversing to go to the downside. I don't know if I showed you the Euro New Zealand, but I'll do that just real quickly. It's the exact same thing, and we're short the Euro New Zealand. Why? The daily's starting to hook. We got a 4-hour hook and a cross, steep slope angle separation, which means this 1 hour is going to finish the cycle. So you notice how we have a fuel gauge. So if I was trading this, which I am, and you're worried about it bouncing to go make new highs, then you could take some profits off and move your stop loss at risk into profit, and the trade management system could do it automatically for you. Right? So why is it just like the other one in the opposite direction? Because the monthly's deeply overbought, ready to turn. Hadn't turned yet, so it's early. My weekly's deeply overbought, hadn't officially turned, but it's getting ready to. My daily's just now starting to turn, and my 4-hour has the hook and cross pattern. So why is this important? At the close of business today, we're down 62 pips for the day. So at 5 o'clock, we're likely to see, right here with the red cursor, we're likely to see the PAI extend lower when we get a new daily candle at 5 p.m. And we're likely to see this is very close to crossing over. But even if it's not until tomorrow, instead of today's 5 o'clock, what if tomorrow we get the hook and the cross? Then that means even if it's tomorrow, this 4-hour will finish the cycle. So AKA, this is going lower. All right. You see, I'm very passionate. So this is what we're offering. We offer the MPA Premium Edition 3 software. And we offer our live trade classes where we place these trades, we discuss it. And one thing you'll notice about me, I give great detail of exactly what the software is expected to do. I show you in advance, days, weeks, and even months in advance, what it's going to do before it does it, so you know what to do when it does it. How about that? And here, what is the Premium Edition 3 software? I promise you, barely scratched the surface. We have an MPA PE3 market scanner. That looks like this. It is a scanner that sets up all the information you want to know based on the time frame. It tells you what direction the trend momentums and the price action indicator are in. It tells you what slingshots are forming on the horizon, which ones are getting ready to engage. It shows you exactly what triggers, those triggers we talked about, which ones are firing in which direction on what time frame. So everything's at your viewing pleasure, and it's 100% customizable. You can put currencies in here, whatever stocks you might be interested, gold, silver, S&P, Netflix, whatever. You can customize it, and it's based on whatever symbols are located in the market watch in which you're viewing. That's simple. If it's in there, you can add it and it'll track it for you. Okay, that's wonderful. What else? That's the beginning. The other one we didn't show you, which I'll show you a screenshot of in a moment, is the MPA Slice of Heaven Finder. We discussed it. That's the one Greg used for his 18,311 pips. That's the one that set up the monthly, the weekly, the daily time frames that I scanned for. And it tells you gold. It mentioned recently what? Sugar. It mentioned recently the coffee. It mentioned the odd CAD, etc., because they're all setting up in that higher time frame scenario. We also have the MPA slingshot trade triggers. Remember, those were on the chart where it triggered lower, red trigger to tell you to sell, and a green trigger to buy. We also have the trade management system. The trade management system is this trade manager that's currently running. I think I have it on this one right here. Pound odd. There it is. Sorry, I was looking for the wrong. It runs. So again, when you're long, it tells you green text. When you're short, it's red text. And then it allows you to what? Automatically move your stop loss in the profit. As you reach your take profits, it'll automatically bank them for you, whatever you need. It's there for you for your viewing pleasure. And again, it's 100% customizable. Notice we're up 1,952 pips to the stop loss, but we got 1,953. So even if this reverse, which would never let it go that far to take us out, it would take us out for profit. So this is an absolute no losing trade. It's an absolute winner because of this scenario. That's simple. And what else? You got so many components. Everything's based on multiple time frames. Everything's based on cycling time frame. We have an MPA Platinum Asia scalping system ideal for trading Forex in the Asia session. We have a Triple P scalping system that works on all markets. The Platinum Asia works on all markets too, but I specifically formed for the Asia market, but I've adapted it for any market. So there's several scalping systems. The breakout trade system we reviewed to you a moment ago was 272 pips, where you tell it to buy the dip in the uptrend. So when the pound rallies and you want to sell it because the weekly and the monthly and the daily are down, it won't buy when it breaks the high, or only sell when it breaks the low. So you can customize it to whatever your need is. And then we also offer a bracket trade. I think everyone understands a bracket trade uses pending orders. So I can bracket it so that if it breaks or goes down to a certain area, you tell it to buy. Or if it breaks a previous high, you can tell it to buy then. Or if it's resistance up there and it reaches the resistance level, you can automatically tell it to sell. And the system will hold it until it reaches that parameter and then enter it automatically for you. All right, so what is the scanner? This is a visual picture of the MPA P3 scanner. Here's the slice of heaven. Depending on the time frame, this is a daily setup, daily 4 hour, 1 hour for day trading, or perhaps a few days. Well, I can set it to the monthly, weekly, and daily, which the slice of heaven was what Greg used. And what we set for what? Coffee, sugar, odd CAD. And it scans through all symbols to find out what's setting up. Then when I find something of interest, I go to my chart, place the trade. Pretty simple. So what is the reason for the two scanners? So you never miss the next big trade. Here's gold. Again, this is the slingshot trade triggers. You get the trigger to sell, and then you get the trigger to buy. Notice? Right? There's the trigger to sell, there's the trigger to buy. And each time we not only have a hook and a cross with the trigger, we got the hook and a cross with the trigger up. That's easy. And then the trade management system you've seen, this is just another screenshot, and this is that footsie trade that's still running, and I expect it to continue to run as this is expected to go lower, but it manages the trade from start to finish. I don't need to sit at my computer all day. I can let it just trade and manage it for me. There it is. It tells you your stop loss, you take profit, and then all information that's required. What's your profit, how many to the next take profit, how many to your stop loss, etc. is all on-screen program. And for complementary sakes, we even threw in a little mini slingshot console. So automatically I can tell when I'm looking at a time frame where different slingshots are forming and what direction the trend is on those other time frames. Okay. Top 10 reasons to trade with the MPA PE3. Automatically calculates support and resistance. Automatically identifies the trend of each time frame. Automatically monitors and tracks time frame cycles. Automatically provides consistent entries, exit, take profit levels based on the triggers, the slingshots, and the profit triggers. The trade management system is twofold. I can instantly get in, or I can set it in advance so it automatically enters for me when the conditions are met. It fits any trading style. It consists of those two scanners we showed you so you don't miss the next big move. It works on 800 symbols, including stocks, Forex, futures, ETFs, bonds, commodities, etc. And it delivers consistent low risk, high reward, high probability trades. And here is the special. For those attending today, we're offering a monthly special. We normally charge $3.99 for that, but today we're going to give you a discounted rate of $2.97. The link has been posted for you to sign up. All you got to do is click on it and sign up. We will have class tomorrow, so you can join us then. And why the MPAP3 software? Because it earns its name every day. Market Price Anticipator software empowers you to read and anticipate price in any financial market, on time, in time, all the time. And we are proud to announce we have over 123 countries and counting. And if for whatever reason your country flag is not on our world map, as soon as you join, you'll see your country flag appear on our world map. So I'll leave it there. Tanya, I want to thank you for your time today. Here's the link, and we look forward to you joining us here at GPA Trading Service. Take care, and God bless you.